Good morning all. May the 9th, 2022 Bulletin. We're borderline risk on off. We're currently looking like we're going to be teetering quite a lot on that risk appetite. We should probably be selling off because of the VIX. And you'll note that I'll show you the S&P sentiment as well when we get there. So the dollar's strong, so that would be like a safe haven float indication that we're going to be risk off. The euro was trying to recover some gains, but this has changed since because it's 15-minute analysis. But do note that the dollar is strong on monthly, weekly, daily, H4 and hourly, and half an hour. So the CAD and the USD are confirming buy. You see the greens are matching. The euro, the pound, yen and gold are matching for sell. What we want is to see colours align. And now the technical bias based on Marcus trend analysis, that's been updated. So you'd want to try and this is the weekly view as well. So this is very high level. So the dollar is strong because it's in a positive number. The yen is weak because it's a negative number. And we might be seeing a change on the Aussie because the Aussie bubble's over here, and it's telling us that the retail guys are going long. Because they're going long Aussie, it should weaken. So that might change in a couple of weeks. So we have to keep an eye on that. Just remember that value of 2. Yeah, Aussie, CAD and Swiss are mixed. You can see how the colours aren't matching. So, it should be quite clear. Just get the reds, block of reds and the block of greens, and that's confirmation. S&P made 2 sells. There's a sell and there's another sell. The retail apes, I don't call them the sheep or the crowd, I call them apes, because what's happening is that they're just doing like a pack mentality, where the sheep get scared and they flock in one direction and they get stopped out and then they reverse. Apes will just hold on. So this is why I'm calling them apes, okay? Hodling, and they're adding to that bias as well. They're not only just going long, but they're adding long. So yeah, ideally we want the sheep to come back because that makes our sentiment analysis a lot easier. But currently these guys are skewing our sentiment, and because of that, it's become very difficult to look at things from a sentimental angle. So really, these technical drops should be forcing them out of their positions, but it's not. So we need to come down. Okay, gold's choppy. Currently sell. If I look at the price now, quickly, 1871. Yes, it's fallen $4 since I did, but since I posted this screenshot, it's fallen $4. 1871.72. So yeah, nearly $4 drop because of that. So you want to get a copy of this trading station. Treasury yield curve, the pumping on the long dated, pumping on the short dated, so that tells us the flight to safety. Where even the thing is, what's quite sad is that if you did put your money in these bonds, because the inflation is so high, you wouldn't get a good return on your investment. You'd have a negative return on your investment. So even if you invested in government bonds, you'd be losing. So where do you put your money? Do you put it in the stock market when it looks like it's going to crash, or do you put it in bonds but you're going to get a negative return? So it might be being flat is the way to go until we see like a flush out. These guys need to get flushed out, and they probably need to get exterminated, and then hopefully they don't ever come back, and then we get the sheep back, and that'll be a lot better, because we want those guys. It makes it a lot easier when we're now investing in the direction. Apes are just too stubborn, so we need to get rid of those guys. So hopefully, they get massacred and they don't return. This is the Reddit guys, by the way. So in case I had a bit of a rant on Friday, but this is what I mean. This is the Reddit guys. We've got to get rid of them. They're skewing things really badly and causing a lot of volatility as well. Because the smart money need to do the opposite of these guys, because these guys are going to be wrong, right? Because they're human and counter trend. That's fine. Yeah, they talked about that. Even though you invested in that, you still get a negative return because of the inflation. We've got CPI this week on Thursday, so that's going to be the risk event. So be careful on Thursday. Euro pound is the greatest buy. Germany 30 is the greatest sell. So hopefully that's clear. Get the colours to match. Pound USD is also a sell. You see how the colours match. And oil is a buy because the colours match. It's dead simple. Our best bet is AJ for US 500 correlation at 78 probability, which is pretty decent. Dollar yen has an inverse correlation like it did at the end of the week. So there's a 78% chance if AJ has a bullish candle, there's there's a 78% chance that US 500 is going to have a bullish candle, and that's doing the opposite. So bullish, bearish. So hopefully that's clear. These are all going like how you'd imagine with risk. Dollar yen isn't; it's doing the opposite. So look at AJ. If you've got some time today, just look at an AJ chart. If it looks really heavy, that there's a 78% probability that the US 500 is also going to look heavy as well. So it can give you a heads up on the move as well. There's risk appetite. Yeah, like I said about those that treasury yield, there's a flight to safety. So dollar CAD's biggest mover. There, so you've got the greens matching. There's a 5% shift. The largest stop loss cluster is AU, and its location is 7150. The size is 4.99. It's sticking out like a sore thumb. Whether or not it's going to be safe, it probably should be. If we're going to fall on indices, then these stops are going to be safe. But if we're going to rally, these stops will get hunted down. But I think we're probably just going to fall because we need that flush out, and those apes need to get exterminated. CAD is strongest and Aussie is weakest, and there's gold being a sell, which I just covered briefly as well. Dollar is in a strong buy note. And Friday was quite poor due to dollar CAD not playing nicely. It paid the herd all week. It was actually, I think about actually removing it from our algorithm, just getting rid of this completely until at least the sentiment goes 50-50. Or either or weakens, but they're both strong, so it's not an ideal situation. What we'd ideally have is a weak versus strong currency, but they're currently both strong, so this is why it's not playing nicely. So we had a minus 33 pip on Friday, and let's see how we go this week. Looks like we're on the precipice of a major decline in risk appetite. Luckily for us, we had the heads up weeks ago looking at retail sentiment, and that's what I mean by this risk calculation. We knew that we're going to be risk off because if the herd go long, then price needs to fall, and that's the simple logic. So trade carefully. It's got a quiet calendar today, which is good. Fairly quiet tomorrow. Maybe the Zoo Economic Sentiment Index worth an eye on, but that's great for us for our trades as well. So I'll wrap up now, and then we'll see how we go this week, and maybe we'll have to remove dollar CAD as well, but definitely get a copy of this trading stage as well, because you get some amazing trade opportunities. That $4 was probably maybe a nice enough move if you had your position size correct. That could have been a nice bit of profit there, just on, like in 3 hours work. And so that's that. So have a good day, and I'm going to do the cot data now, so I'll speak to you soon.